You've seen the headlines. The ringgit recently hit 4.12 against the US dollar, the strongest it's been in a while. But here's the big question: is this just a short-term boost or a sign of long-term recovery? Why is the Malaysian ringgit rising so fast? In today's video, we're analyzing the Malaysian ringgit, why it's strengthening now, how it compares to the past, and what the future might hold. To understand where the ringgit is headed, we need to go back to the late 90s. The 1997 Asian financial crisis hit Malaysia hard, causing a sharp decline in the value of the ringgit. Foreign direct investment, FDI, plummeted, and Malaysia became less attractive to international investors. The situation got worse with the 1MDB scandal in 2015, which caused another hit to the currency. But why did capital controls have such a lasting impact? In simple terms, foreign investors lost confidence. Countries like South Korea and Singapore, which were hit just as hard during the Asian financial crisis, bounced back quickly because they didn't restrict capital outflows. In contrast, Malaysia's capital controls led to slower GDP growth and less technological innovation, key drivers of productivity. Fast forward to today, and we're still seeing the ripple effects of these decisions. The recent strengthening of the ringgit is good news, but it's important to look deeper. Malaysia still faces structural problems. We've become overly reliant on cheap foreign labor, and because we haven't moved up the value chain in industries like manufacturing, our productivity remains low. Low productivity means low wages, which keeps Malaysia stuck in a low-cost, low-value economy. One reason behind the ringgit's recent appreciation is Malaysia's application to join BRICS, an economic bloc comprising Brazil, Russia, India, China, and South Africa. While Malaysia hasn't officially joined yet, the speculation surrounding this move has boosted investor optimism, driving the ringgit higher. But it's important to note that joining BRICS alone won't guarantee long-term prosperity. Just look at Egypt, a recent BRICS member, whose currency continues to devalue. So, while the BRICS news has created a short-term surge in the ringgit, experts warn it may be a speculative play rather than a sustainable growth factor. The second key driver of the ringgit's appreciation is tied to the U.S. Federal Reserve. With growing expectations that the Fed will cut interest rates soon, global investors are shifting their focus to emerging markets like Malaysia. A potential Fed rate cut could lead to a weaker U.S. dollar, which would push up the value of emerging market currencies, including the ringgit. This trend of capital flow towards emerging markets happens every time the USD weakens, as investors look for higher returns in regions with growth potential. Another reason for the ringgit's recent rise is Malaysia's strong GDP growth. In the second quarter of 2024, Malaysia's GDP grew by 5.9%, surpassing analyst expectations. This surge was driven by strong household spending, cash handouts, and significant export growth. Exports surged 12.3% in July alone, thanks to the booming semiconductor industry and a rise in shipments to key markets like the US and Taiwan. With Malaysia being a crucial player in the global semiconductor supply chain, particularly in Penang, foreign investments have poured into this sector, further strengthening the ringgit. However, while the ringgit is performing well now, there are risks on the horizon. Inflation, energy shortages, and regional inequalities could undermine this growth. Malaysia's reliance on low-wage foreign labor and slow progress in moving up the value chain in industries like electronics manufacturing also pose long-term challenges. To sustain its economic growth and the ringgit's value, Malaysia must continue its efforts to reduce protectionist policies, open up the economy to more competition, and promote innovation. So, can the ringgit keep strengthening? Possibly, but only if Malaysia makes some key changes. According to experts, there are a few things the country must do. In the short term, we might see the ringgit gain another 3 to 5% if the Federal Reserve moves ahead with rate cuts. First, open up the economy to more competition. Let local businesses compete with international ones and innovate. Second, reduce protectionist policies that are holding the economy back, such as favoring elite companies through regulations that stifle growth. And finally, crack down on rent-seeking activities. That's when people or companies use their power and connections to make money without contributing to productivity. But without structural changes in Malaysia's economy, such as moving away from low-skill labor and addressing political corruption, it's unlikely we'll see long-term appreciation. As always, currency movements depend on a delicate balance of global economic factors, and Malaysia will need to keep up its efforts to attract foreign investments and grow high-tech industries like semiconductors and data centers. What's your take on the Malaysian ringgit? Do you think it will continue to rise, or is this just another temporary bounce? Let me know in the comments below. And if you enjoyed this video, don't forget to like, subscribe, and hit that notification bell so you never miss an update on Malaysia's economy and beyond. Thanks for watching, and I'll see you in the next video.